Welcome back to Pipeline Trading. In this video, we're breaking down Bitcoin, Ethereum, Solana, and XRP, focusing on market structure, trend alignment, and where risk is actually building. The key question remains simple. Are we near a bottom, or is this just another pause before further downside? Let's dive right in. First up, Bitcoin. On the daily time frame, Bitcoin is currently trading near $68,500. The structure is very clear. Bitcoin is showing a micro-bullish pattern inside a macro-bearish trend. What does that mean? On the short-term time frame, the price is forming a bullish consolidation after a strong reaction candle. This suggests that over the next several days to a week, Bitcoin favors a counter-trend bounce higher. However, when we zoom out, the macro structure remains decisively bearish. Bitcoin previously formed a clear bear flag following a sharp impulse lower. That pattern resolved to the downside once support failed, confirming that sellers remain in control on the higher timeframes. This tells us something important. Short-term upside is possible, but the broader trend still favors lower prices. Let's look at the higher timeframe context on the weekly chart. Bitcoin remains below major structural resistance. A long-term descending trend line which connects prior cycle highs has now rejected the price multiple times. Each rejection increased selling pressure. And when Bitcoin failed to reclaim that level, we saw a downside acceleration. Markets operate on probability. Repeated failure at resistance increases the likelihood of a breakdown. And that's exactly what we saw. As long as Bitcoin remains below that macro resistance zone, bullish narratives remain counter-trend. So what are the key levels to watch on Bitcoin? If Bitcoin continues its short-term bounce, the $80,000 to $85,000 zone is the primary resistance area. This region aligns with prior breakdown levels, structural supply, and lower high resistance. A rejection there would reinforce the bearish macro trend. On the downside, a clean break below $60,000 would significantly increase the probability of a continuation toward the $50,000 region. Longer-term risk could potentially extend even lower if equity markets also roll over. Now let's turn to Ethereum. Price recently experienced a sharp flush lower, breaking a key support zone before stabilizing. That former support has now turned into resistance, which is a critical technical shift. Even though the price has bounced, the structure remains corrective, not impulsive. Ethereum is currently forming a micro-bullish pattern, suggesting short-term upside is still possible. However, that upside is likely capped near the $2,500 to $2,600 level, unless the structure changes. As long as Ethereum remains below that zone, the macro trend stays bearish. So what's the most important level for Ethereum? It sits between $1,500 and $1,600. Historically, Ethereum has never broken below a prior cycle's bear market low. Holding this zone is essential to maintaining long-term bullish market structure. A decisive break below this area would represent a major structural failure, not just a pullback. Till then, Ethereum remains in observation mode, not accumulation mode. Next, we have Solana, which is also forming a micro-bullish structure within a broader downtrend. From a percentage standpoint, Solana has the potential to rally sharply, possibly toward the $115 to $120 zone. This would represent a meaningful counter-trend move. However, Solana has already violated prior swing lows, which weakens its structural integrity. If the current support trend line fails, downside risk opens up toward the $50 region, where the next major demand zone resides. This is a swing trade environment, not a long-term confirmation. Finally, let's look at XRP. This is the most technically concerning chart in the group. A major long-term support zone dating back to the prior bull cycle has already been decisively broken. While XRP may experience a short-term bounce toward former support between $1.60 and $1.70, that area now represents heavy resistance. Below the current price, there's a clear liquidity vacuum with limited structural support until you get to the 95-cent to $1 zone. This is not a healthy chart from a technical standpoint, and any upside should be treated as corrective unless the structure is fully reclaimed. So, what are the final thoughts here? Across all these crypto markets, we're seeing the same theme repeated. Short-term bounces. Macro bearish structure in fragile market conditions. Until we see impulsive upside structure appear, discipline remains critical. We wait for confirmation. We respect the trend direction. We avoid forcing trades in these emotionally driven markets. If you found this breakdown helpful and want more content like this, subscribe and hit the bell icon to stay connected. As always, stay disciplined, trade with intention, and God bless.